Summary of today's top news, November 3, 2025. Technology. Global technology companies are undergoing massive workforce reductions, with over 110,000 jobs lost so far in 2025 as firms pivot toward generative AI and cloud infrastructure. Investment in next-gen tech is strong, but experts warn of significant disruption for traditional roles.
Finance and markets. U.S. stock markets have shown upward momentum, with major indexes rebounding thanks to strong corporate earnings and expectations of easing interest rate policy. This reflects renewed investor optimism in tech-driven stocks.
Economy and investment. A report warns that the global investment boom in AI infrastructure, with an estimated $3 trillion projected to be spent on data centers by 2028, may be heading toward a bubble, given concerns about profitability and energy use.
Housing recession risk in the U.S. The Scott Bessent, U.S. Treasury Secretary, warned that high U.S. interest rates may have already pushed parts of the housing market into recession, particularly impacting lower-income consumers. He urged the Federal Reserve to accelerate rate cuts.
Hong Kong's economy expands in Q3. Hong Kong's real GDP grew by 3.8% year-on-year in the third quarter of 2025, showing continued economic expansion despite global headwinds.
India's exports to the U.S. plunge amid tariffs. India's exports to the U.S. dropped by 37.5% between May and September 2025 after steep U.S. tariff hikes, including previously tariff-free categories, which fell 47%.
OPEC Plus production adjustment to maintain market stability. The oil-producing group OPEC Plus, including Saudi Arabia, Russia, UAE, Kuwait, Kazakhstan, Algeria, and Oman, announced an additional production adjustment of 137,000 barrels per day starting December 2025, and paused further production increases through early 2026 to support market stability.
Key economic data in focus for markets. Analysts say that as markets hunt for new leads, sectors such as power, mining, and property are in focus, with earnings reports, tariffs, and trade disruptions influencing stock movements.